Hello everyone, I'm James Tetreault with your West Ag Grain Market Update for June 14th, 2018. Well, you couldn't ask for a better day here in Southern Ontario, warm, bright, and sunny, unless you're a farmer and you're looking for a rain. A few areas yesterday around Hamilton were lucky enough to receive some much needed moisture, but for the rest of us here in Ontario, we are still seeking that half-inch of rain. Beans and corn seem to be doing well, but it's the wheat that growers should be concerned about, as we haven't had a significant amount of rain here since it went into head, and I believe we are starting to lose a few bushels every day as we continue to stay dry. It's also been a rough couple weeks in the market since the US wrapped up its planting, as we've lost 44 cents on the corn market since May 24th, when July corn futures were sitting strong at $4.12. We've also lost $1.21 in the same time period for July soybean futures. So it's been a frustrating few weeks as we search for reasons why the market has stumbled as much as it has and try to find where those bulls are hiding. So there are a few things that are to blame for the recent lows. For instance, the funds who were aggressively long just a few short weeks ago have now backtracked as they begin to notice no really widespread weather worries out in the US. Another reason that has attributed to the recent lows is more of a significant threat as of late of a trade war, and not only with China, but now with NAFTA, after Trump came out firing ahead of the G7 meetings about the unfair tariffs everyone has on the US, and saying that the US should add tariffs to offset the US's so-called trade deficit with those countries. So as the funds go from a large long position to a flat or short position, and with nobody with any real significant market presence stepping in as a big buyer today, there is a very real possibility that we can continue to create some new lows. I believe the goal here for the next few weeks as a grower is just to be patient, create some new pricing points, and reward the market when we get those bounce back days, as the cure for low prices tends to always be low prices. Moving back a few days ago on Tuesday, the USDA released its supply and demand estimates for the month of June, which was somewhat of a bullish report as we saw US soybean ending stocks trimmed up for both old and new crops, with the new crop down 30 million bushels and old crop down 25 million bushels from May's report. Globally, however, soybeans ending stocks were slightly increased, with Brazil being the biggest contributor as they increased their production forecasts. Corn production from the estimates report for 2018-2019 remained at 14 billion bushels, with an average yield of 174 bushels per acre. However, they did trim new crop corn ending stocks by 105 million bushels to a tight, compared to recent years, 1.5 billion bushels, and that's thanks mostly on increased food, seed, and ethanol use for the 2018-2019 marketing year. So it'll be interesting to see if weather becomes a factor, how much tighter that ending stock number becomes. Locally here in Ontario, we continue to see corn basis levels hold. The talk seems to be that there is still a chunk of corn for sale and that there is no real big push to get it to market yet. We're still holding above the $5 delivered end user price range for the summer months. The story from growers seems to be, let's wait and see what weather conditions are like out in the US come pollination time, and see whether or not we can get some sort of weather rally, big or small. Time will tell, and weather is always a hot topic of discussion this time of year, and it's always interesting to see how the market reacts when the words dry and pollination are thrown around in the same sentence. This has been your West Ag Grain Market Update. I'm James Tetreault, and I look forward to talking to you guys next week. Stay safe and keep the swag in ag.